Is it just another bear market rally, or did we just see the bottom of the market? That's coming up on 3 Minutes on Markets and Money. Last week, the markets had a very strong rally, up 6.5% for the week on the S&P. Was that the bottom of the market? Well, maybe not just yet, but it could be. We won't know here for a while, but we do have some good catalysts set up in the markets for a continued rally this week. A $30 billion rebalancing coming up this week, end of the month of June, end of the second quarter. Mutual funds, hedge funds all have to rebalance, do their quarterly window dressing parade. That's coming up this week, adding that additional buying pressure coming into the markets. Also, the first 2 weeks of July tend to be seasonally very good. Now, one thing about this year in particular, seasonality hasn't worked well. The strongest 6 months of the year starting this year actually started out to be one of the worst years for a start of the market since the 1930s. So again, just because seasonally it's been working out in the past, it hasn't worked this year, but July tends to be a little bit stronger in the first 2 weeks, particularly coming out of that second quarter rebalancing process. However, the rally we had last week, very strong, about to trigger some buy signals on both our MACD and our money flow signals. The oversold conditions of the markets are turning up and back on buy signal as well, but not overbought yet. So there is certainly some support here for a bit more of a rally. Now, this rally that we get is going to run into the 20-day moving average today. And so we'll see if we can get above the 20-day. Above that becomes the 50-day moving average. And that's where the target right now for this rally runs, is between 3,900 and 4,000 on the S&P 500. That will intersect along with this 50-day moving average with this downtrend that we've been at for the last several months. And so again, every time this market has rallied to the top of that downtrend channel, we've seen a failure. That bear market rally ends and we wind up retesting lows or setting new lows in the markets. Now, one thing about these bear market rallies, we've had these very strong weekly rallies previously. We've seen this numerous times. Back here in May, had a very strong rally right at the end of the month and wiped out all the losses that we had for the month of May. So again, going into the last week of May, big losses for the month, lots to worry about. By the time May was over, most of those losses had been wiped out. Seeing the same type of setup right now for the month of June. Very tough month of June at the beginning. Potentially going to wipe out most of those losses by the end of this week. But again, we've seen this before. Back in March, very strong rally led to a sell-off in the markets. After the Russia-Ukraine invasion, markets rallied sharply, sold off to new lows. Back even in early this year, strong rally led to a retest of lows. Bear market rallies have been the measure of the markets this year. So again, as these markets rally, remember there's a lot of trapped longs in the markets looking for an exit. So again, as this market rallies back towards the top of this downtrend channel, back towards the 50-day moving average, look for sellers to show up. Watch your positions carefully. Don't take on too much risk here, but it is a tradable opportunity to add a little bit of money to the markets for a trade. Just don't forget to sell once we get back to the top of the channel. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.